You are listening to ChartingWealth.com's comprehensive review and forecast for the week beginning Monday, the 22nd of May, 2017. Do not forget, my friends, that we are now entering the summertime trading zone and things get sloppy. Have you heard the adage? If you haven't, you will as soon as I say it. Sell in May and go away. Live to trade another day. That is an old adage in the stock market because in May, a lot of the big money starts leaving or leaves the market. And then things start getting a little weird as the volume goes down. So watch for that to happen as we move along. Now let's jump into these charts. We have an update on everything at the end of the day on Friday for Friday itself. We see the S&P 500 up 0.65%. We see the Nasdaq 100, that is the Qs, up 0.42%. We see bonds up 0.23%, and we see gold up 0.5%. Let's jump right into bonds first. What do we see at the end of the week? We don't have a crossover going up. We thought we might have one happening, but it has not happened. Instead, we have a doji. What does that mean as far as Japanese candlesticks go? It means lots of indecision. We see the derivative oscillator continuing to lose downward momentum, but we see the PPO, the price percent oscillator, clicking over, actually accelerating down. So we have conflicting signs there, which again leads us to the indecision that we see on the candle for the end of the week. Remember, we're still in a confirmed down move on the weekly chart. And we're in a confirmed down move on the 2-day chart. Now, let's take a look a little bit closer and see what the next week might have for us. Now, the last two 2-day candles we have confirmed going down. We have the Wednesday candle, that was the 17th, and we have the Friday candle, the 19th. They are both confirmed moving down. We had that crossover going down back on the 17th, and we had a big candle forming on the 19th, well, on the 18th, and then it lost a lot of that downward momentum, so it's backed up and it has quite a long tail. Now, as we start looking on our 4-hour chart, we can see that the market did trundle down, crossed over, moving down, actually had crossed over moving down all the way back on the 9th on that 4-hour chart, moved up some and then really started tanking and started recovering. So as we try to figure out what's going on in the chart, we want to look for a potential entry point. Now, our traditional way, of course, is to wait for this pullback that is underway on the 4-hour chart to pull back and then rotate back over going down. That may very well happen at the beginning of the week, and traditionally that's the best way to enter. You wait for your shortest chart, the 4-hour chart, and we teach that on how to read a stock chart. Just go to our website. You can find that at chartingwealth.com if you haven't already had it, already seen it, already studied it. But what we would want to do traditionally is wait for the rollback to occur and then the 4-hour chart cross back over going down. It has not done that yet, and you want it to do that after you have your confirmed crossover going down, which of course on the 2-day chart occurred, like we said, on the 17th. Looks like a backup is underway. So we'll continue to monitor that as we go through the course of the next week. Just remember, leaving you on the S&P 500, we do want to try to look for an entry point since we have both our weekly and our 2-day in the same direction, but we still have lots of indecision on this last week's candle. However, our primary indicator, the PPO, shows that it is heading down, and we have that 2-day crossover also that reconfirmed it. And the derivative oscillator is also heading down. So just watch it, be careful, see how much that 4-hour pullback is. And when that 4-hour chart starts rotating back down, look to jump in over the course of the next week. Okay, and remember the time of year we are in. Now let's go back to our weekly chart. We're going to take a look at the Qs. That's the Nasdaq 100, up 0.42% for the day. Now, we had a beautiful run up as the week started, and then, of course, on Wednesday of this past week, we had that big down trobbing that occurred in the market. And what do we see going on? Well, derivative oscillators continuing to gain energy. We do see that the price percent oscillator is sliding sideways. We still have movement above the weekly trend line, and we did draw that weekly trend line for you, and derivative oscillators continuing to move up. So let's take a look at the 2-day chart and see what we see there. It is trying its best to get close to a crossover going down, but it has not done that yet. Now, as we said, we jumped into this after that weekly vertical crossover back right there on, well, let's get the exact date. The weekly vertical crossover occurred for the week ending the 28th. That was April the 28th. That following Monday, when the markets opened, of course, we jumped in right around $34 or so, $34.50. And of course, we've seen things go all the way up to the high. Before the troubling the market took of 39. Of course, it closed at 37. So we got in at 34.50 or so, up $2.50, depending on what you want to let ride. Be careful. We told you, you can feel free to go ahead and get out. It's getting close to crossing over that weekly trend line too. When that occurs, and of course, that and or the 2-day chart rotating over going down. But remember, the last 2 days, stocks have been up. So continue to watch this. You can always get out, my friends, and get back in. You can take your profit, or as we're all doing, as you should be doing, practice trading, you can just see how this works and if it's going to bounce off that weekly trend line and if it's going to bounce off the PPO. It may, although again, start backtracking. It has bounced off once in the last 6 months, 4 or 5 months or so, 5 months. It's bounced off one time. So just be careful. Do note that your derivative oscillator has rotated over in the negative. As we look back and backtrack, that typically is a sign that it's going over. So again, looking back, backtracking can always be helpful. And in fact, looking back all the way to the prior year about that time frame, what happened. And of course, you can see that in that time frame, the market also had moved down for a while. So again, just pay attention, look back and see how the specific chart reacts to the various indicators. That can also help you make that decision. But again, making $2.50 profit, or if you got out anywhere above that, you made $3, $4, $5, be happy with that, my friends. You were only in that trade for just a few days. Do not think you have to get everything, and do not adopt this mentality that I'll get out when I gain back what I lost. You haven't lost anything until you actually sell. You've not gained anything until you actually sell. Do not adopt that loser mindset. Okay, let's keep pushing through these charts back to the weekly, and we're going to take a look at TLT, up 0.23% for the day. Now remember, the bonds are in an up move on the weekly chart since all the way back in February. We still have a confirmed up move on those bonds. They've slidden sideways for a while and up, but again, predominantly up. For the prior 3 weeks, they went down and then crossed back over, moving up. So we have 1 week of up movement. We also, during that time period, if we look at the 2-day chart, we see that we have a 2-day crossover going up. That occurred over the course of this latest candle. It has now closed. Again, same kind of thing, taking a look at what's going on your 4-hour chart. It appears at this point to have peaked out. You can sure wait and do our traditional method of waiting for a rollback and then getting in at that point. Again, you've just had the confirmation with the close of the candle of your 2-day crossover. So watch that carefully and see if it develops over the course of the next week. And then lastly, we will take a look at gold, up 0.5% for the day. Gold was trying, it looked like, over the last couple of weeks to cross over going down. It did not make it on the price percent oscillator. It did cross over on the derivative oscillator, which is interesting. Ended the week with either a doji or a spinning top, whichever you, more like a spinning top. But again, indecision, tending to the upside, but still indecision. And if we go from the weekly chart, which again is in an up move, to the 2-day chart, which is in a confirmed down move, again, over the course of the next week, watch and see if the chart crosses over going up. If it does, then of course we'll move our 2-day vertical crossover line over to the time that happens, and then you will look for an entry point. But at this point, you don't have one because the gold, that is the weekly vertical crossover, is up, and the 2-day vertical crossover is still down. Now, of course, on gold, what do we always want to look at before we leave the chart? That prescient 4-hour chart that is beautiful. It crossed over in the afternoon of Thursday, the 11th of May. It has moved up. We talked a day ago about how it appeared to be topping off, and it does. It appears to be sliding sideways. So again, if you jumped in on that 4-hour chart, think about it. Think about cashing out as you see the derivative oscillator losing energy. Still hasn't crossed over going down. Might have some left. So again, and always keep in mind the weekly chart is still in a confirmed up move, and it looks like the 4-hour chart is trying to move in that direction. So just keep an eye on it if you jumped in on that 4-hour chart. That's the only chart that we have where that 4-hour chart, my friends, works over and over and over again in gold. It is just beautiful. As we've said many times, it stops working sometime in December, about mid-December, and seems to start working again in about mid-January. The trick is follow the rules, see what works, modify your rules based upon what you learn, and then make successful practice trades. Folks, I want to tell you about, lastly, one thing that we're in the middle of. We have a graphic designer laying out a trader's journal for us. We actually have a sample of the trader's journal for you. It includes trade worksheets, it includes daily market worksheets, and it includes weekly market worksheets in a handy spiral-bound format for you. In fact, we're going to offer those for sale, but what we're trying to do is get your feedback and ideas as to what you think about them. I'm going to actually load up a PDF on all the show notes and the emails that we send out. Ask those of you who would to check it out. Give us some feedback if you think it is helpful. We're going to put it into a handy 13-week, which would basically be a 3-month, a quarter year edition, where you can go through, fill this out, and have it in a handy book, easy to fill out and keep up with format. And we would just appreciate your feedback on it, what you think about our initial ideas. And again, all those worksheets are always available to you in the show notes and on the emails. There's links to all of them, the daily, the weekly, and the trade worksheet. We want you to see those in the format we've now laid them out in and get your suggestions. And again, please, if you're not already signed up for our newsletter that we send out every day, you can sign up for that at chartingwealth.com. All the great training is there. And please subscribe to us on YouTube. Follow us on Facebook, Twitter, Instagram. We love to hear from you. You can always write us cw@chartingwealth.com. Thank you so much for being with us, my friends. We are here for you and because of you. Take care. God bless.